Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. Okay, today a little bit provocative maybe, but we're going to say don't trust your accountant. Now, of course, that sounds ridiculous. You've got to put some trust in your accountant because you're employing them to do a job and they should know a lot more about that job than you do, and you are putting some faith in trust in your accountant, of course. But the thing is, it's your business and it's your money, and you need to make sure that you're on top of it. You need to make sure that you're asking the right questions, that you broadly understand everything at a high level. Again, you don't need to understand the intricacies of Division 7A or Section 100A or anything like that. Those things can be really complex and it's not necessary to know them. But just at a broad level, you need to understand why you're distributing money in a certain way. You need to understand how the performance of your business. You need to understand its cash flow, its profitability, its tax outcomes. You need to understand the tax liabilities that you have in terms of PAYG installments and withholding and GST, all these sorts of things. The worst thing you can do is just turn around and go, oh, well, I thought my accountant was doing that. Now, of course, that's not to say you can't expect your accountant. You should absolutely expect them to do their job. But really, the best advice I have as a business owner myself is you need to make sure that you're on top of these things. And I speak from experience. I mean, I'm an accountant, so you think that I would be on top of these things. But sometimes in the past, I have delegated the bookkeeping to my business, and I actually do most of it now today. And whilst I could delegate it to someone else, I like to do it just because it forces me to make sure that I'm on top of things. Now, I would be anyway, but it's sometimes tempting just to go, well, that's someone else's problem. I've paid someone to do that, and I'm going to trust they're going to do that. And whereas it's ultimately your responsibility, and so you need to take ownership for those outcomes.
So let's start off with sort of talking about the limitations of accountants. Now, again, we're accountants ourselves, so we're not discounting what we do, but we're trying to sort of come from it from a standpoint as to why you should really be involved in your business's financial affairs. Now, accountants typically report history, sort of they prepare your tax return, financial statements, and BASTers and compliance documents and all that, but it's all quite retrospective, right? So they're not really giving you real lifetime data when they're doing so. So they don't usually sit inside your business. They're not giving you real-time insights. Their incentives are typically compliance-driven and not strategy-driven. So it's not a flaw, it's just the nature of a typical accountant's role. Now, if you're obviously engaged with a holistic accountant, then they'll be involved more so in terms of understanding your business, setting particular budgets or projections or financial projections in place if you've engaged them to do so, or they can typically be involved in sort of somewhat a virtual CFO role. That's typical sort of limitations of our accountants are from that compliance perspective. So sometimes they don't necessarily provide you with the value or insights that you really need to sort of make informed decisions within your business.
Now, you need to understand the business economics. Again, you don't need to know the nitty gritty, but you need to understand it at a high level. So it's really surprising. I was listening to a story by Richard Branson was telling the story, and he was in a board meeting. This is after he started the Virgin Airlines. And someone asked a question about revenue and profit, and he looked with a puzzling look on his face. And one of the directors said, "Come outside." And so you don't understand the difference between revenue and profit. And then the person drew a picture of a net going through water picking up fish. And the person said, well, the water's revenue and what's left in your net is the fish, is the profit. And he sort of got it. Kind of a bit of a surprising story if you're starting a multi-million-dollar airline, but it's a great example of just understanding it at a high level. You know, there's a saying that revenue is vanity, profit is sanity, and cash is reality. And it's great to look at top line revenue and make sure that grows, but profit, which is the sanity bit, make sure that you're actually going to work and you're getting a return and you're being rewarded adequately for the risk of running that business. So you want to make sure that your profit at a gross level, but also on a unit basis. So if you're selling widgets or you're selling a particular service, make sure that every time you offer that service that you understand the profitability of that. What revenue do you need to charge in order to make a reasonable profit, or what do those economics look like? And as I said, cash is sanity. At the end of the day, that's what's left in your bank account. And hopefully a business is cash flow positive because, that's what you're going to need to pay for your living expenses and lifestyle and personal investments and all those sorts of things. So again, you don't really need to understand it in the nitty gritty, but you really do need to have a good idea that, hey, if I've got 3 products, if I sell product A, I'm going to make 30%, product B is a lot tighter, it's 10%, etc., etc. And understand, from an overall business perspective, my profitability is X percentage and my cash flow is Y if there's a difference between profit and cash. And then understand your costs and your cost structure and what you're sort of signing up for. So, if you employ another staff member or you go and buy some new plant equipment, for example, how does that going to work? What do you need that to do in your business in terms of revenue and profit for that to be worthwhile?
Then understand your tax position. Now, your tax is often your single biggest outgoing after wages and rent. Now, you can't just wait for your accountant to sort of prepare your tax return to tell you what's due, when it's due, because you could end up with a large surprise. And as Short sort of mentioned, cash is what you take home. Now, if you haven't accounted for all your income tax, your payroll tax, your super, and so forth, then you can run out of cash very quickly. And cash is the lifeline of any business. So you really need to forecast your tax liability monthly or quarterly. Now, doing it any more than that can be overthinking it. So, especially if your business is relatively consistent in terms of, your payroll, your profit for the year, and so forth, then it's quite easy to sort of forecast your taxes. Now, if you're doing it more frequently than monthly or quarterly, then what can end up happening is if you get sort of large payments in one month or large expenses in one month and more revenue in the other month, then you can get a real mismatch in your tax position. So, it's really important to sort of do this probably monthly or quarterly so you can get the average result of your tax position. Now, it's also important to understand how your different structures work, how trust companies, individuals, and how they all interact with your business and who's liable to pay for what your distribution strategy is. Because at the end of the day, it's all well and good to have a business that generates a whole lot of money, but how do we get that money out? How do we invest those monies? So it's really important to understand your total tax position so that you can sort of diversify outside your business, as well as understand what cash you can actually sort of play with.
And we've spoken about cash a lot because, cash is king. Like cash is the lifeblood of a business. And it's really important to understand your net cash position at any particular time for a whole host of reasons. Firstly, if you're scaling and you're reinvesting in your business, and you need to make some capital expenses or, you're investing in a new part of your business that isn't cash flow positive yet, you obviously need to make sure that you're going to be able to pay your bills on time and that you've got enough cash flow. Secondly, you want to make sure that you've got a bit of a buffer, some working capital, in case a client doesn't pay on time or an expense comes out of nowhere. Those expenses always arise. And so you want to make sure that you do have that buffer, that buffer isn't committed. And lastly, if you're going to make some personal decisions in terms of, investment decisions or personal financial decisions, like book a holiday or those sorts of things, you want to make sure that, the business has the cash and it can afford for you to be able to go and spend that money. So therefore, what you need to do is think about, okay, this is the cash in the bank, but what are all the things? What are all my liabilities? You've got creditors, of course, but then you can offset that against debtors, assuming that they're fully recoverable and you've got a good debtors sort of turnaround time. And then what are the liabilities that you don't know about? So are there any purchases that you've made that haven't yet made it onto the balance sheet? Or are there any tax liabilities that also aren't on the balance sheet that you know of? And a big thing, particularly around quarterly BAS, lodging of end of year tax returns, these sorts of things, that's when we see some really lumpy expenses with business. And that's the key thing to really manage around in terms of cash flow. But cash is king, and it's something that all business owners need to keep on top of.
So the question then beckons is, what is the right relationship with your accountant? What should they be doing and how should they sort of be involved within your business? So what I always say is that it's a two-way relationship. Your accountant should be a partner, not sort of a crutch that you lean on. Their role is to help you interpret data, not to be the source of it, where they just send you a set of financial reports or tax returns to sign and send you a payment slip at the end of it. Now, it's really important for you and your accountant to sort of work together in a partnership to sort of understand, to challenge you to make you understand, are you across your PAYG installments? Are you across your margins? Are you across your business as a whole, so that you can sort of challenge yourself in your own business and set goals for yourself in your own business? You need to think of them as your advisory bench. And that's where it really comes down to. An accountant shouldn't just be preparing a set of financial reports and tax returns. And I say this carefully because sometimes in certain businesses, at certain points in time, then it's basically just a set of financial reports and tax returns. There's no value to be added. But in a lot of other times, there is certain value to be added. Are we discussing tax strategies? Are we doing tax planning meetings? Are we discussing how we sort of can distribute profits and dividends? What we should really be doing to minimizing our Division 7A loans and the like? Are you really across this, or is it more so just let's just sign this off and make the tax man happy? So it's really important to have a relationship that's a two-way relationship where you're not sort of afraid to reach out to your accountant and have that conversation.
On the financial planning side of our business, we work with clients that are motivated to build wealth. What we don't do is motivate people to build wealth. And it's kind of the same. I said, don't trust your accountant because the responsibility rests on you to understand these sorts of things. Now, it's really difficult for us, challenging for us to work with an unmotivated client. Like if they're not interested in it, they don't want to learn about it, they don't want to ask any questions, it's really difficult for us to be able to add a lot of value, provide a lot of proactive advice. Now, on the flip side, we don't need to sit down with the client and trawl over financials and spend 3 hours going through the nitty gritty either. That's neither nor enjoyable nor valuable to do. It's somewhere in the midpoint here. It's really about, like the Richard Branson story I just told, it's really just about understanding the high level economics of your business, understanding at a high level what we've done from a taxation strategy perspective, how we're distributing, why there's a Div 7A loan, why we need to pay that profit out as cash, these sorts of things, understanding how your business is performing, what your taxation liabilities are. And if you don't know, ask. And there's nothing that goes on in a business from an accounting practice perspective that isn't easy to explain in simple terms. And there's no dumb questions here either. What we'd like to leave you, if only one thing today, is to really encourage you to take an active interest in your business and take an active interest in what your accountant is doing, because you never know, asking a couple of questions, you might end up walking away with a much greater understanding, and that allows you then to strengthen your business, strengthen your own personal financial situation also. Okay, that's it from us for this week. Until next week, bye for now.